Hey everybody, Courtney Smith here with our Wall Street winners for April 27th. Just keep racking up the profits, what can I say? And of course, here we're racking up the disclaimer, and let's take a look. All right, so the way we've made money is being on the long side of the S&P, of the stock market. But we're starting to see it's still bullish, but we're starting to see some of the underpinnings start to weaken. First of all, look at the purple predictor. That's that purple line there, and it's underneath the price action, which means that the smart money is starting to take profits here in the broad stock market. In addition, this whole rally has occurred on declining volume. Now, you always want to see volume confirm the price action, but here, volume isn't going up, it's going down. So it shows that this rally that we've had is starting to run out of gas. Over here, you can see in the upper right-hand corner that the red and the green lines are basically equal. Once again, showing that we're kind of moved into a neutral phase in this bull move over the last couple of weeks. I mean, we're really trading at the same price we were 2 weeks ago. So this really means that this is a stock picker's market, not a stock market. So we've been able to make money because we've picked the right stocks. The market as a whole hasn't helped us, but our stock picking abilities has helped us. And that's what you have to do right now. We were in a period where the whole stock market was 100% correlated, basically, when we had the COVID crash in February and March. But that's not the case anymore. Now, one of the interesting things is that the NASDAQ is stronger than the other indexes. On Friday, we made the second highest close of this whole move. We didn't do that in the Dow and the S&P. In addition, look at the purple predictor. It's above the price action and it's strong. So what we're seeing is, once again, a market of stocks, not a stock market. The market is focusing now on NASDAQ stocks, in particular, biotech, right? To try to conquer COVID, medical technology, drug companies. Those are where the action is. And for fully paid up members, you know that's really where our portfolio is. So we want to be in more NASDAQ type stocks. We also have the decline in volume. You can see that at the bottom, but it's not anywhere near as extreme. And really kind of over the last 3 weeks, we're kind of stable. We kind of have sideways volume, not declining. So it's not a good situation, but it's much better than the S&P and the Dow. Seasonality, we're going to still leave this on a neutral. You can see here that the Russell 2000 is struggling. It does have a bullish purple predictor, but once again, volume is clearly falling. In addition, take a look here. We're going into a mini seasonal bear through the month of May. You can see basically May is kind of a negative month, and then towards the end of May, we get a pretty strong up move that really runs until the end of the year. So this next month is going to be, according to seasonality, is going to be the worst months of the year. It's going to be hard to beat February or March, but we could see another decline here in this month just because of seasonality. Yield curve pretty stable. Volatility coming down. It'll continue to come down. Obviously, if we see a drop, which I think we will see a bit of a drop here, it'll maybe bounce up, but we're not going to go back up to 80 or 85 anymore. Asset allocation, very stable. Stock market risk indicator, very stable. Global shares, once again, stable. Bonds creeping higher, and I think we're going to continue to creep higher. The market really, every day that goes by, the market thinks, well, you know what? We're going to have no economy here. There's not going to be any inflation. It doesn't matter what the Fed's doing because there's just not going to be any inflation. And also, we need to buy some high quality credit rather than junk bonds. So they're trending into the bond market, the treasury bond market. You can see the smart money's been buying for quite some time. That's the purple predictor. So this looks like a sluggish bull market. I'm not getting long bonds because it's a sluggish bull market. I prefer exciting bull markets. Bond key factors. Now, this is kind of interesting. Let's stop here for a second. So bond yields are the green line, and you can see they're right down in the very bottom of the lower right-hand corner. Let's take a look at the three key indicators. The top one is gold, making new highs. That would suggest higher interest rates. The next one is the chart itself, that red and black chart. It's plunging to new lows, so it is suggesting lower interest rates. The one that I found the most interesting is over the last couple of months, the blue line. The blue line are treasuries in Germany. Those yields bounced up from the March 1 lows when our treasuries moved to new lows. So that one's a little bit saying that yield should be a little bit higher as well. So we've got some divergences going here. US dollar pretty stable, a little bit strong. Gold has been, this is interesting because gold, you can see here, we haven't surmounted the highs that we made a couple weeks ago. So we have a bull market, but it's a crappy bull market. But there are individual gold stocks that are screaming higher. There's also individual gold stocks that are just kind of limping lower. So once again, we're seeing a stock picker's market in gold stocks. I mean, extreme divergences between the weakest gold stocks and the strongest gold stocks. Gold key indicators neutral, maybe even slightly negative, but let's call it neutral for now. Crude oil. All right. So you probably saw the headline where the futures contract actually traded below zero. So if you bought crude oil, someone would pay you to buy it. Okay, that's pretty cool. The problem is you'd have to dump it on the ground as soon as you took delivery because there was no place to put it. No rail car, no storage facility, so you just lose the money that you were just paid. But anyway, okay. So you can see we had the big plunge-o-rama early in the week, and now we've rallied back up again. Right now, the demand for oil is declining faster than the supply. Supply is down about 10, 11% because of the agreement between Saudi Arabia and Russia. But the demand has dropped over 30%. So I told you originally we could get as low as $10 or $12. We've achieved that. Now, I think we're going to probably stay in this low area, under $20, probably test the $10 level again. Nobody needs oil right now. And we got plenty of it in big storage containers. So we don't need to be pumping any oil at all. Bitcoin, boring. We're at the same price we were a couple of months ago. Purple Predictor is bullish. That's the only thing that makes me really want to get long. But generally speaking, I think there's better opportunities in the stock market, gold, lots of other places to make money, not in Bitcoin right now. This is boring. All right, freebies, big hugs and kisses. But really, the cool kids are the ones that are fully paid up members. So fully paid up members, hang on just 1 second.